Hi, folks. Dan Bird here with the daily scan for Friday, January 31st, the end of the month and the end of our January barometer. We'll take a look at that and see how it looks. Market was interesting today, sold off at the end, although I'm not really surprised. This is my splash screen for tonight. I don't know if I can make it bigger, but at any rate, we're going to look at this chart in a second, and I've talked about this many times before, so this should not be surprising to anybody that's followed this channel. This is the typical market cycle with accumulation phase at the bottom and then distribution phase at the top and markup on the left-hand side and markdown on the right-hand side. And we'll look at that distribution phase. Does it look similar to where we are right now? It certainly should. So as always, I'm not a financial advisor. You need to make your own trading decisions. Anything that I talk about here is for educational purposes only, and you need to do your own due diligence. So let's take a look at the market first, and then we'll get into some conversations here. So today went down slightly. Oops, that's not what I wanted. This went down slightly right there. Because even though we sold off at the end of the day, it wasn't enough to really produce a lot of sell signals or bearish signals. However, they're headed that way. So if this continues, and you can kind of see the sideways pattern here, very similar to that distribution phase. If that continues, then next week, probably by middle of the week, I expect that we're going to get a lot of bearish signals. I'll show you what the matrix looks like right now. You can, for those that have subscribers, you can look at this at any time to see what things look like. And you can see not too much change today, but a lot of these will change if this continues. So if we look at the S&P, for instance, you'll see right there, big down day today, right after it hit the resistance line. And I'm going to talk about this, but this looks to me like a double top, maybe even a triple top. Very, very jagged cup and handle, but the handle failed. So it did not break out. So this could be the beginning of something much more serious. As I've always said in the last few weeks, 58.50 is the key. That's what we need to hold. If we drop through 58.50, then we are probably heading down pretty far. So let's take a look now at what else was interesting here. Magnificent Seven versus the Russell. I'm going to talk about this in a minute too. This is the Mag 7. This is MAGS. It's a ETF, supposedly encompasses the Magnificent Seven, but I'm going to show you something here that might surprise you, actually. So it right now, it still has a short-term down, but look at the short-term signal is just going sideways right there. So this is just teetering on the edge, waiting to fall over. Of course, Bitcoin, we'll look at that. Bitcoin, as I talked about previously, is highly correlated to the NASDAQ 100. So that means if the market falls apart and the NASDAQ 100 drops dramatically, then so will Bitcoin. It is very highly correlated. I showed that in a chart. Actually, it's actually on the website. So if we go back to the charts page and we look on the left-hand side, there's a whole Bitcoin section right here. Here's Bitcoin correlation with the TQQ, the triple leveraged. And down here, you'll see anything that's in the top. This is the correlation chart. So it's correlating Bitcoin versus the TQQ, the 3XQQ, which is the same as the NASDAQ 100, basically. So you can see Bitcoin is up here right now. This is over 10 years. Bitcoin started off not being correlated or inversely correlated, meaning that when the NASDAQ went up, Bitcoin did not always go up. Or when Bitcoin went down, the NASDAQ might have been going up. But as you can see, as we moved along this 10-year cycle, Bitcoin is becoming more and more highly correlated. In fact, right now it is extremely correlated. What that means is if the NASDAQ 100 drops significantly, then so will Bitcoin. So keep that in mind. This is not just an opinion, by the way. This is data. This is the data. Ever since pretty much 2023, all the way back to the end of the bear market, right through the bear market, in fact. So really at the end of COVID, Bitcoin started to become more and more correlated. One reason for that, I think, is because it's more widely owned now, even by large institutions. So it's going to start to track very similarly to the NASDAQ 100. So keep that in mind. All right. Let's take a look at the dashboard. Let me close these down. Dashboard today, you can see the market fell apart right here, 1 o'clock. Fell apart right at the end. I'm not surprised. It's Friday, and you know what happened on Monday this week. The market, I think, is very nervous about going into the weekend holding anything. Afraid that maybe the same thing is going to happen again. But we'll see. So not looking too good. NASDAQ 100 right down here. Had a really nice run in the beginning of the day, then fell apart towards the end. Bonds, 20-year bonds still going down. The 10-year went up slightly. Crypto, Bitcoin we just talked about. It's at 101, so lost 2.7%. Just out of curiosity. NASDAQ 100 lost only 0.14%. So percentage-wise, the NASDAQ 100 dropped much less than Bitcoin. But Bitcoin is correlated, so if one drops, the other will. On the sectors over here, communication services is the #1 sector, and actually Google had a pretty good day today. Google looks like it's breaking out of a long squeeze pattern, but everything else is negative. And we have at the top healthcare, discretionary, and communication services and technology are the 3 aggressive sectors. So it's really a mixed market. You can see there's lots of discretionary in here. Biotech, automobiles did pretty well. Internet was the #1 out of 10, #1 industry group. And then on our top 10 list, Atlassian, looks like they reported today. There's a black candle. They had a nice day. HIMS still going up. There certainly were some winners. Credo trying to make a comeback, but only looked like it pulled back. CLS also trying to make a comeback. It recovered everything from that big drop off after the AI scare on Monday. CLS reported yesterday, had great numbers, and they've recovered pretty much everything and more. They actually went up to 140, I think was the high. So all of these look pretty good. There's a lot of shooting star candles, by the way. Worst one of the day was Deckers. Deckers Outdoor also reported terrible earnings, so they dropped considerably. Next level down, we've got, see if anything of interest in here. Aris was one that was looking good. They do recycle water for fracking, so you would think that they might be a good company, but didn't do well. Peloton continuing to fall apart. SoFi Technologies trying to make a comeback, but didn't do too well. Honest, which is Jessica Alba's company. BST, one of the energy names that did well, was really tied to AI, and it fell apart along with AI. It had an inside down day today, so it started going down. All right, so let's now take a look at what do I want to show you next? Let's look at the January barometer, since today is the last day of January, and we'll see how that did. Big sell-off. I pretty much showed you this before. Hit the resistance area right there, sold off heavily. So we now have, for the full month of January, we still are positive. I don't know what the percentage is yet. I'll figure that out and put it in here. So the full month of January was up. So we've got one down. The first one, Santa Rally, was down slightly. First 5 days was up slightly. And the full month of January looks like it's up pretty nicely, actually. I can get a sense for what this looks like using this percentage change. So we ended right here and we began right here. So do this around the other way. So we began right here and we ended right here. So looks like it's up about 2.68%. So that's what it looks like what that one will be. 2.68% down here for the full month. In the newsletter this week, I'll put in what that means. I'll get the actual percentages from Stock Traders Almanac, who does that kind of research, and I'll tell you what typically how the year ends up when something like this happens. All right, so that's the January barometer. Let's take a look at, I want to talk about the Magnificent Seven here for a second. So you would think the Magnificent Seven is supposed to be an ETF that holds all the Mag 7 stocks, right? Well, first, let's look at the Qs. This is the triple Qs. This is the NASDAQ 100. And you can see the Magnificent Seven is highly weighted near the top: Apple, Microsoft, NVIDIA, Amazon, Broadcom, Meta, Tesla, Google, Costco, Netflix. These are all the ones that are in my trend model. And you can see the percentage, the weighting. So 9% Apple's at the top, and then Microsoft, et cetera. So that's the triple Qs. If we just roughly, that's 17, 25, 35, 45%, about 50%, down to Netflix, it's about 50% of the whole ETF out of 100 stocks. 50% of them, and Google has, 2 right there. So that's really the top 10. Netflix would make the top 10. 50% of the NASDAQ 100 is comprised of just 10 stocks. Now let's look at MAGS. MAGS is the ETF that supposedly tracks the NASDAQ, tracks the Magnificent Seven. So let's look at the holdings for MAGS. Well, isn't that interesting? The number one holding, 48%, almost the same as the Magnificent Seven makes up of the triple Qs. 48% of this ETF is made up of US Treasury bills. Very interesting. And then we've got 11, there's 19, there's 20, 28, 36, 44, 52, 59, call it 60, 67, 73, and another 11, 83, 84, 87. The rest of it is all Magnificent Seven. However, 50% of it is US Treasury bills. So this is the rest of it right here, which basically is roughly 50%. So 50% here and 50% on the triple Qs. Which one do you really want to own? Triple Qs has much more liquidity. Anyway, that's just an interesting side note. Thought I would show that to you. Next, I want to talk about some of the scan options. And let's go back to the website. And I did put now on the options page for subscribers. Not only did I put all of the weekly options, so this is a CSV file that you can import into your own platform, including stock charts. But now I also include the scans that I showed you yesterday, and I'm going to look at some of those today. So if you just click on that, then it gives you a PDF, and it explains the scans. It explains how to import the file that I just showed, the CSV file. It explains how to set up a scan. This is basically my chart list, but whichever one you use will be named something different, but that's how you import it in. And then down here has all of the scans. Scan 1, scan 2, and all you do is just copy the blue one and then paste it into your scan engine up here, and you're good to go. And then save it, and you have the same scans. So that's how to do it. It's now on the website. So for subscribers, you can go out and pull that down. I am going to now go to, well, I thought I had it up here, but I'll bring it up. I'm going to go to ACP, and we're going to take a look at a couple of the scans. And interestingly, because I ran this earlier, I'm going to put this in 3-panel mode, which gives me the Keltner channels in the middle. This happens to be Morgan Stanley, but I'm going to run a couple of scans. But interestingly, some of the results were some of the stocks that somebody asked me to look at. So first I'm going to run a scan down here on, where's it? The options right here. Most of them were bearish reversals. So I'm going to look at the bearish ones. So first we'll look at candle reversals. This one right here. We'll run the scan. And those are the names we get. So Kava is one of the stocks that I was asked to take a look at. Happens to be on this bearish candle reversal. So if we look at Kava, let's see if we can find the candle. Well, there it is. That is a bearish engulfing candle. So not only is it bearish because it's completely engulfed the previous day's bullish candle, but it's also at the top of the Keltner channel. So that is an extreme level. That's usually where things reverse and probably will come back down here at least to the mean, which is about 125. So interesting that that one, which was one of the ones that I was asked to look at, is on that. The other one I was asked was, I'll just look at these now, is SG, which is in the same group as Kava. Should look probably similar. It actually looks worse. It has a shooting star candle right after hitting the 50-day moving average yesterday. So remember, Kava's candle was bullish. SG's candle is bearish from yesterday, and it continued to go lower. It's right at the mean right now. So that implies that it may actually go to the other extreme on the other side. So we'll see what happens. The other one was Lilly, the last one. Here's Lilly. Lilly, not quite an engulfing candle, but certainly a bearish one. So Lilly looked like it was having a nice run. It's still below the 200-day, but above the other moving averages, which is good. Momentum looks good, and the ADX line is above 25. So all of that looks pretty good. And the weekly chart looks okay. It needs to get above the 21 and the 50 right there. And this, it looks like it's curving up, which is positive. So it might make a run, but I think it's going to be dependent on what the rest of the market does. And we'll look at that in a minute, but the rest of the market isn't looking great. So anyway, if we go back here, you can see the Dow was one of the ones that appeared on the scan. So the Dow has a bearish engulfing candle as well, and it's right up in the 3X Keltner area. This is a semiconductor stock. There is a shooting star candle right there, the top of a run, and right at the top of the Keltner channel. So using all these things together, you can pretty much see the ones that might be ready to correct a little bit. And for those that like options, this might be a good candidate for buying a put. There's Akamai, bearish engulfing near the top of its Keltners. Here's Goldman Sachs, same thing. Qualcomm, another semiconductor there. That's a shooting star. Here's Roku, bearish engulfing, and C Limited, bearish engulfing right after a shooting star. So there's a double whammy on that one. And it's in the 3X Keltner channel. So this one right here probably is an ideal short candidate. It had a shooting star and it gave a confirming candle today, which also happened to be a bearish engulfing candle. So let's look at a couple of other ones real quick. Daily squeeze down. See what we get here. Okay, on this one we've got Micron. So Micron has a shooting star. It is not at the top of a run, which is where you like to see shooting stars, like this one over here. You like to see it after a big uptrend, but still the same psychology applies. It tried to make a run during the day, and by the end of the day, it sold off hard. And everything else is the momentum is starting to cross over the zero line, which is what this scan is all about. This is looking for things that are just beginning to go, momentum just beginning to go negative. So this one right here might go down to the bottom of the Keltner, which is around 82. What else do we have here? Here's a Bitcoin, Bit Digital. Almost an engulfing candle right there, but what we're really looking at for the scan is the momentum down here going below the zero line. It actually has a weekly squeeze as well. So this might show up on the other scan that we do. So not only does it have a weekly squeeze, it looks like it's firing to the downside, and the momentum is just starting to cross over. Not too good for that one. Lockheed Martin. Lockheed Martin trying to make a comeback today, actually had a pretty good day, even with the market selling off, but momentum just crossing over down here. And on the weekly chart, it's had a terrible week, obviously. So it looks like it's trying to recover, but it's got a lot of work to do. It's going to have to, it's all the way down here. So this is the area where typically they will reverse and probably come back up to the mean, which is about 480. All right, the last scan that I'm going to run here is the weekly down. Now this scan, the way this is constructed is it's looking for a squeeze on the weekly chart over here, and it's looking for a daily going below the 0 line. So didn't get too many, but there's the one, both of the ones from the previous scan actually. So this is the one that I mentioned before, that it had a weekly squeeze and it went below 0 on the daily. And sure enough, it did appear on this one. Micron also has the same thing. Micron has a weekly squeeze and went below 0. So this is probably firing to the downside for Micron. Things don't look good there. All right, that's it for the scans. Those are the scans that I just posted out there for anybody that has a stock chart subscription. You can go out and download those and take a look at what those scans are and run them yourself, just like that. The last thing I want to show you is this right here. So this is the chart that I started with. If you will remember this that I've showed you many times, this is how market cycles typically go. Accumulation phase, a markup phase, a distribution phase, and then a markdown phase. And the distribution phase is kind of a fake out. It goes up, it comes down, starts to go back up. So everybody jumps in thinking they're buying the dip. It goes up, but comes back down again. Everyone that got in up here starts to sell, rinse and repeat until finally it breaks out through the bottom. So tell me if it doesn't look similar to this. So there's where we are. This is a weekly chart. It has not broken through the bottom yet, but this bottom line right here is 58.50. So that's the key. And that's below the 21-week moving average as well. So you can decide for yourself if this looks like a distribution phase similar to what this looks like up here. And if that is the case, doesn't mean we can't come down and go back up again and continue to do this until we break through. But today was a big sell-off in the afternoon. In fact, I'll look at that over here on the charts page. On the daily routine, I had a couple of people send me notes saying they love that I put this together. They've always been trying to figure out how to use these charts over here. So the daily routine has a 10-minute chart right here. And if we look at that, you can see what happened. Market went up, S&P went up until 1 o'clock, just about 1 o'clock, and just started selling off hard all the way down. Came back a little bit at the end of the day, but like I've mentioned before, that's normal at the end of the day when market makers are rebalancing their books. So it does not mean anything. We could still continue to go down some more on Monday. So keep an eye on that. So that's it for today. Thanks for watching. Newsletter comes out tomorrow. For those that are interested, you can get it just by clicking on this little button right here. So it's on breakpointtrading.net on the website. Apple, by the way, did report last night after the close. And let's take a look at Apple. Had a good reaction initially, but just sold off all day long. In fact, let me look at Apple on the 10-minute chart. There's Apple. Gapped up. It right up here. That's the open. It opened up there and sold off all day long. That can be really frustrating for somebody that was waiting for Apple to report before getting in. And then when they saw a pretty good earnings report and a gap up, these people here jumped in because they thought it would keep going up, but it didn't. Instead, it came down. Again, this is rebalancing. That does not mean anything for Monday. But Apple just sold off, actually came down lower than lower than the whole week. So the week began back here on the 27th. It was actually higher than Monday, but ever since Tuesday, right here at 234 hit right there. So that's pretty solid support, short-term support. So we'll see if I can hold it. But not a good look for Apple today. It's actually not even a black candle, just a solid red candle all day long. So not too good for Apple. Anyway, that's it. Thanks for watching. Please let me know if there's anything you would like me to look at or anything you would like me to cover. Be happy to do that. And have a great weekend. We'll talk to you again next week. Please like and subscribe. Let's get to 800. I think I was really close to 800. I'm not sure what it is right now, but let's try to get some subscriptions and try to get it to hit 800. That would be awesome. So thanks, everyone. Have a great weekend, and I will talk to you next week. Take care.